All right, so yeah, we've just had the US CPI out. The year on year, basically all of the readings there have sort of come under expectations. So for the year on year is 3.7 down to 3.3, came in at 3.2. We have month on month CPI 0.4 percent, expectation 0.1% came in at 0.0. And then your core month-on-month CPI was supposed to hold flat, or was expected to hold flat. Not supposed to, I suppose, but and that was supposed to come in at 0.3%. It came in 0.2%. And so yeah, basically all of these prints have sort of come out a lot cooler than they've been pricing for in the market. And you can see on the screen here, the market has just gone, yep, that's it, we're done. At least for the time being, US dollar at these levels, boom. It's funny actually because if you look back 1 year almost to the day, I think 3 days ago or so, maybe it was a week before that, I don't know, it's definitely around this time last year is when we had that sort of CPI print at 6.3%, and that was a massive sell-off as well. And obviously sort of like, that started a long sort of chain of a sell down from the highs for the US dollar, sort of bar the sort of last 3 months sort of coming up. But look, that's just looking a little bit further. The here and now is definitely what's happening with the US dollar here. You can see it's coming down. It's testing those re-lows, so those lows after NFP and early of last week, and it's coming down heavy and strong. So look, I mean, on a daily, you can see this very much. This is how you go. You're coming down, you found support, you find resistance, bang, you come down. This will look to come down for another leg. So I'm pretty confident that this lower level here, our price target that we've been looking at for a while, will get a touch up. Probably sooner rather than later. That 104 was the sort of price target that we've been looking for. Um, these things can sort of reverse, but I would say, look, the writing's on the cards there. You've got a technical sort of break. You've got the fundamental sort of break to back it. You've got 3 months of USD long position gains if they haven't booked them up here. And this is what these pushes up were. And I was saying every time, these are squeezes just coming down. No, let's sort of drive it up and squeeze a bit more out. And I think now, you've got the data to sort of back it up. You're seeing the technicals break that way as well. I think there's certainly a chance that we could see a little bit of a move down here. So the bear flag seems to be sort of playing out here. So where else did I have this one marked out? There's sort of bear flag pattern that we've sort of been looking at through this week and through last week as well. It definitely seems like it's going to be pushing to the downside over here now. And like a lot of these sort of things are lining up to sort of say that, look, the price target should be hit. Even if you're just going to trade the measured move on these things, there will be a bit of a sort of up, back and forth on that. I don't think we're going to get a straight, direct sort of shoot down here, but I mean, you can see DXY's just cut off 60 points in 12 minutes or thereabouts. So certainly I think it's coming down. A lot of people are sort of unwinding their long positions, booking whatever last profit they've got, or the people that were sort of very much in the camp that were going higher and higher, and rates were going to go higher for longer, and all these kind of bits and pieces. The change with this now is that it supports the idea that the Fed wants to pause. I mean, there's no like there is some sort of loose talk of cuts and all this kind of stuff, but that's starting to be priced in for late 2024. So we've still got 12 months on that kind of stuff, but to get to cuts, you need to have the pauses first. And I think certainly, targets for CPI is around that 2%, though it's been fudged to sort of say more realistically, 2 to 3%, just to give them a bit more of a sort of sense of accomplishment the closer they get to it. They came in at 3.2%. So if you look at the previous months, we had it got down to 3% back in July, and then obviously it had that tick up, 3.2 in August, 3.7 September and October the same, and now it's bang, shot straight back down 3.2. So I certainly think this sort of supports the idea that they might be doing a little bit more cooling or a little bit more holding, and you're going to see people look for a better, better yield, better return in other places. I mean, the thing is, not the Ukraine, the Middle East situation, that really seems to have dissipated as far as the market's concerned. That takes away safe haven sort of requirements for the US dollar, and also sort of now sort of like you got these people that are sort of saying that, look, we're not looking to sort of raise the rate. So, people are going to look elsewhere for these things as well. So you can see it's really testing this previous low level at 104.84 here. If we get a sort of push and a drive down underneath this, as I said, I think there's a good chance we come down to our price targets pretty quickly. So obviously the benefactors of this are going to be gold, and as we can see, this one popping out of that channel there beautifully. And this is exactly how I said, we're going to get this up, and there was going to be this little push down here, which we've sort of seen. Obviously, a bit dramatic on my pictures here, but the idea, this is how gold works. The same thing that I mentioned in the daily or weekly review. I can't remember when it was. I think it was the weekend review we did the other day. It does this little fake down and then boom, shoots up. And we've seen the same thing as it's pushing up to this 1960s level here. So, gold's still got a little bit of work to do because, again, it was sort of running mainly off Middle East, but, that sort of disappeared a bit. But as you say, sort of like as people sort of get out of their US dollar positions, they're looking where else can I make some sort of return, and obviously the metals are going to be getting quite a push as well. So I don't normally sort of do silver on the charts, but you're seeing silver shoot right up here as well. So I mean, this just alone has just shot up, 1.7%, or maybe a little bit shorter. What's that? 1.6% in a couple of minutes. So definitely metals are looking very strong there. Aussie was a great benefactor too, and benefiting greatly from this. As we see, it's sort of pushing right out here. This is a very nice sort of break that it had here from a technical sort of standpoint as well, because we've got the channel coming down here. We've got the break, we've got the pullback, and then obviously, as it sort of really sort of waited and sort of thought, what is it going to do? Bang, and it's just exploded off up to the top side. I mean, even sort of for Aussie, which is not a particularly fast mover, 1.17% just on this news. So, that's obviously doing quite well. And that really puts it back on the radar that, we're going to be looking, particularly if we can get up above the sort of, 64.50 zone. So I'll chuck it onto the other chart that I've been sort of mapping these ones out from. So yeah, as you see here, we're sort of coming up to, these previous highs from a technical basis. If you're going to just shoot straight through these things, you need the news to drive it, and that's what we've got at the moment. So this is a very big move. I mean, you can see how big these candles are. Even the large sell-offs weren't matching the size of this. So I think a lot of people that were in the camp of Aussie dollar going sort of 62 cents or lower even, they're sort of saying, okay, look, we had the push up to 65, we survived that, it's come back down now. How many times do you want to have a shot? How many times do you want to sort of poke the bear before, basically you just don't come back out of it? Because there's going to be a lot of people that if you're not getting out of your short positions now, there's a good chance you're going to get squeezed. And as I said, up above 65.20, we're going to be seeing, at least a push up to our price target is a short term of 65.80. I know around here we've got a lot of sort of technical levels and that, which are going to be quite difficult. But certainly in the moment, we're getting a nice little push off to start it up. So, and these are one of those ones where it hasn't been sold down straight away. So, we can sort of see how it sort of plays out from here. We may get this sort of head and shoulders that we sort of played out the other day, but it's hard to say because obviously this is such a strong move. This could very well just sort of basically just not come back for this right shoulder here, and we could see this sort of grind its way back up towards 65. I think above 65, you're going to be seeing quite a few people sort of perk up with this as well. So yeah, that's just a little sort of catch up of the US CPI print that came out. Certainly some nice moves in the market off the back of that. I think a lot of people were waiting for that print. There was a lot of predictions going both ways. As you've sort of seen with my charts and that and my sort of positions, I've been trading long gold, long Aussie, and obviously the metals as well. So we can sort of see copper coming right up here. This is a crucial one for copper. This is the sort of long, sort of, the daily falling resistance that we've been sort of looking at. As I said, if you drag this one right back out, this is something that sort of like has been basically started off from, March this year. So this is going to be quite significant if we can get a break and a hold above here. As I've sort of touted for a while, 380 I think is a good level to sort of say that, hold on, copper's back in town and it's going to be moving a little bit stronger. So, it's at the moment it's just sort of sitting tight. It's pushed right up into it. But yeah, we're just going to have to sort of see what happens with this moving forward here. All right, cool. That's about it from me. I'll be back tomorrow.